live. Let's get to Kevin Green, who joins me on this day. And obviously, we got some initial jobless claims this morning, 199,000 on the headline. Not too bad, actually, one of the lowest this year, KG. What does it tell you?
Well, we also have to keep in mind there are some seasonal factors as well as seasonal adjustments into this number, but we are not seeing a ramp up in jobless claims at this point in time. And in fact, we are starting to see it actually move to the downside if you're looking at the last couple of weeks, which is a positive sign. And you talked about the fact that it was better than the street's expectations, coming in at 199,000. The street was looking for 219,000. But what's also very key, Sam, is this volatility that we are seeing coming from Texas. And that's really what's been driving a lot of this move to the downside, as well as maybe some slight upticks here. Texas actually saw a 50% drop on a week-over-week basis in initial claims, so that did draw on the index as a whole. You also did see continuing claims also dropping to the downside as well. Once again, major adjustments coming from Texas, as well as major adjustments coming from California. So I would say this is seasonal in nature. Let's see if this is going to be reconfirmed over the next week or 2 weeks here. But overall, we are seeing better than expected economic data. And what's the result of that? The dollar is moving to the upside here today. Yields also moving to the upside. It makes it a little bit more difficult for the Fed to actually cut rates, which could provide maybe a little bit of volatility for the markets as a whole. I'm not sure if that's the main driver for a little bit of selling pressure today if you're looking at the indexes. But once again, the economic data is looking pretty favorable, at least for now. Over the next month or so, month and a half, we probably will get a little bit more of a smoothing out of a lot of the economic data coming from the federal government, as the government shutdown effects are still kind of being reflected in some of the data points.
Yeah, we are looking for a bit of a cleaner picture. Hopefully we'll get that come January. Let's just park the macro aside there. Let's focus on China, Nvidia as well. So while Beijing wants everybody to use domestic chips in the country, the companies over in China have a different idea. They still have a strong appetite for these H200s. We're seeing this report now that Nvidia is saying, hey, TSMC, put your foot on the gas. We need to get these chips there. What are you seeing? What's the significance of this report?
Yeah, it could be actually very significant. It looks like the market's really kind of pricing in that they would like to see the numbers actually being reflected, or China, from a government standpoint, actually confirming this report from Reuters here. But they are reporting that Chinese tech firms have ordered over 2 million chips, or H200 chips, from Nvidia here. Now, Nvidia right now has around 700,000 within their inventory. So that's a major deficit that you are looking at. And we are seeing potentially TSMC starting to ramp up production of these H200 starting in Q2 2026. Now, this could actually have a meaningful impact when it comes to revenue for Nvidia. Each one of these chips cost around $27,000. So if you're looking at that $2 million order, if you will, if that does come to fruition, you're talking around $54 billion in revenue that we could see Nvidia capture. Now, obviously, that will not be in 1 quarter or even 2 quarters. That could be spread out over a couple of quarters here. But that's something that has not been priced into their guidance moving forward. They have actually removed the China sales when it comes to these GPUs because of the turbulence that we've seen from policy within the United States as well as China. So a really optimistic story that we are seeing right now. Nvidia actually was in this kind of consolidation pattern, this triangle formation, for a fairly long time. It has broken out, but it has not been able to get above this 190 level. Every time that we get to it, we see some significant selling pressure. I think if you can break above 190, close above that level for 2 or 3 sessions, maybe some buyers will then step in and try to reattempt new all-time highs. But this is actually a really decent story. You get a little bit concerned, though, Sam, that a lot of these positive news stories around artificial intelligence and these purchasing agreements and things of that nature just has not been able to be a very strong and long-lasting catalyst for a lot of these stocks. That gets a little bit concerning that maybe the market is kind of calling a bluff on maybe some of these news reports.
Yeah, you raise an interesting point. I mean, anything can happen between now and next year, obviously. But it seems like this story has something in it for everyone. I mean, obviously, Chinese companies, domestically speaking, that want to get their hands on this stuff. As you say, Nvidia, which reported strong earnings, Sands, China, also TSMC, and the US government, because they're also going to get a cut from this, according to the Trump administration, too. So, an interesting story. We'll continue to track that one. Let's switch gears to what's happening in solar. It's been a pretty good year. I'm just looking at this TAN ETF. No doubt a moment in the sunshine. Pardon the pun, up 40% year to date. Just talk us through that.
Yeah, well, Sam, it's the end of the year, and I think it's very important for us to kind of look at a lot of industries or even sectors that have been beaten down one way or another. We have seen the solar sector in general see a lot of headwinds when it comes to tax credits being pulled from the U.S. government, as well as maybe policy from the current administration that might not be as favorable. But this is kind of one of those industries that is still thriving to the upside, especially when you're looking at commercial demand. Energy production, especially when you're coming from solar, is the quickest that you can actually bring to market, bring online in order to put into the grid or even power some of these data centers. So there's still a lot of strength in these companies like First Solar, or even Sunrun for that matter, that is actually pushing this higher. So keep your eye out on this. There's other industries like the healthcare industry right now, especially when you're looking at the insurers, that have had a lot of negative headlines, a lot of regulatory headwinds, but maybe they actually do see a little bit of bargain hunting from a lot of investors in 2026 because of the oversold nature of their industry. It may be that the final product of the ACA readjustments that we might see in 2026 could be a tailwind for these insurance companies. So just trying to draw a little bit of a parallel that sometimes the narrative and the headlines may not actually match the price action that we are seeing for these stocks. And I think the TAN ETF and the solar stocks, for the most part outside of in-phase, really reflect that this year.
And what is going on with the metals space today? Because we did see a nice recovery yesterday. We're back in the red today. I'm just looking across some of the price action right now. I mean, you've got silver getting hammered to the tune of 6.5%, platinum down about 7%, palladium down 3.5%. I'm seeing this headline, obviously, that's been catching a lot of attention, how China is actually going to pluck a page out of its rare earths playbook now and going to be restricting silver exports, I believe, starting from New Year's Day tomorrow. How much of that has got to do with it? Just talk us through the price action.
Yeah, so for that story, I think we also have to clarify putting restrictions in and curbing exports rather than potentially banning. And I think the market's kind of preparing that maybe a full-on ban of silver exports could be in the cards for next year. That would actually be a very, very negative signal between the U.S. and China relations, unfortunately. So that is obviously causing some headlines and some movement in the metal space as a whole. I think you're also just seeing the fact that it has run up too far, too fast here. And you are starting to see maybe a little bit of digestion in the market. We might be seeing a topping pattern taking place. Usually when we see reversals, it's not a one-day event. You see a battle at very high levels. You see volume being outsized for a couple of trading sessions, and then we try to pick a direction. It's either going to be a consolidation and continued break to the upside, or it's going to be a breakdown when you're looking at silver. Now, platinum or palladium, for that matter, was actually down about 8%, 9% in the overnight session. Buyers have stepped in and trying to defend the 20-day moving average. So this is not over with yet. You are seeing that volatility. The market's trying to price in the direction of what's going to happen next. The fundamental story is there, but is the valuation story where a lot of these metals really making sense for big institutional investors? And I think that's the battle that we're going to see over the next couple of weeks.
Yeah, and we've had a lot of guests talking about this sort of commodities bull market being one of the big stories for 2026. So we'll have to wait and see. But for now, we are seeing all the metals down quite considerably. Thanks, KG, for getting us across the price action and some of the macro data and other headlines we're tracking this morning on this New Year's Eve.